Hey there. Today we are going to do our Monday state of the market. We're here with Tim Sisson, who's going to try to join us more frequently, but you've been getting your
Mhm.
butt kicked as well as us in title. Everybody's been getting rocked here.
This
Right.
entire industry, we're all inundated. It's the craziest time we've ever seen, and we're facing something, and I'll get into it a little bit more in a second. But you get to the point where you go, do we hire for this surge? Do you hire more hands? Because you'd hate to have a big staff for if things start to slow down. But the idea is that we're probably going to remain this busy for quite a while. But a lot of changes. Everybody's crazy busy. It's insane.
It's been fun. Fun.
Fun. Yeah, it's one way to put it, sure.
All right. Our first question is, have you put your hat in the ring to have the new name be the Washington First Home Mortgages?
I think we'd be jostling with a lot of other
Yeah.
companies, and we don't have as deep a pockets. So if anybody, it would be the Washington Quickens. But nobody wants that. Nobody wants that at all.
At least throw your name in the hat in the ring just to see. You gotta try
Yeah,
it.
I'm surprised Quicken hasn't gone after the Houston Rockets, so they could be the Houston Rocket Mortgages.
Yeah. Yeah. It's gonna happen eventually.
Right.
No, we're serious. All right, so we're gonna go into the real serious question because I know your time is fleeting. You're super busy. So first one
Mhm.
is everybody asks how are the rates looking, and of course this is what July 13th. So the conversation we have
Mhm.
today is only good for like today and the next few days. If you want updated information, be sure to reach out to one of us. But as of July 13th at 1:12 p.m., how are the rates?
Yeah, I mean it's the lowest rates have ever been since we started recording that data, and that's not hyperbole. It really is. Freddie Mac last week, he kind of update. I know what my company's rates are. Another company has their certain rates for certain products, but Freddie Mac kind of tracks the average interest rate across all products, across all credit score criteria, basically. And they reported 3.03%. I'm sorry, as the median interest rate across the board for 30-year fixed, and 15 is about 2.5%. So, a government rate right now, high twos, with great credit scores, conventional loans right in the low threes with great credit scores. I mean, it's just absolutely phenomenal. So, uh, as we were talking about earlier, and I don't want to skip ahead in your questions, but
No.
low interest rates help inundate the system, as you might imagine, because we're trying to prioritize purchases, business, but also we're just getting a ton of refinances right now, or refinances. Some people pronounce it that way. Tomato, tomato.
Not me.
Um, so, so if you want to refinance, obviously rates are super, super low right now, and running numbers and rate quotes is pretty easy for us to do, but the line is very long. I'll just say that very much. And as a company, we have to decide this influx of refinance business. We cannot allow it to affect the purchases because the purchases have a shelf life. They have to close on time. So rates are fantastic, but just that's part of the conversation when a new client comes in the door is to talk about turn time.
Yeah, and that's my second question. How does the turn time look? I know you and I were experiencing some delays, 40 days, a little bit more.
Mhm.
Usually we're used to 30 days, but like you said, inundation's been pushing us back. How on July 13th are we looking for turnaround times?
So in the past, as you know, you asked me, what's a good closing date? When's the soonest we can close? A lot of times that's the question. When's the soonest we can
Hmm,
close?
interesting.
A conventional loan where all the stars align can still close in 30 days, but I'm talking it's got to be absolutely perfect. So what we ask for on those easy loans is about 35 days. Um, Under promise, over deliver. If it is a loan that has to go elsewhere, like a USDA or a CDA, which is the Maryland Mortgage Program, basically we do most of the work and then we send it out to them for them to just sign off on it. That's an extra 5 to 10 business days. USDA right now is on a 5-day turn time, 4 or 5 day turn time. CDA is 48 hours up front, and then when you submit the file back to them, it's another 4 days. So you have to try to set those expectations up front the best you can. So what we actually did recently is start to lock our refis for longer, 60-day refi, so that we don't have to rush the refis. We're trying to rush the purchases, right? In a competitive market, somebody makes an offer. Sometimes closing date, it has a lot to do with that offer being strong or weak. So if we tell them 45, 50, 60 days, and then that seller has to then go around, go buy a house and go, adjust their contract, it's not as great. So we're towing a line. It's tough as a lender to always say, hey, give me as much time as I possibly need, because we know that it's also competitive.
Yeah, multiple offers. We're seeing all kinds of escalation clauses, multiple offers, all kinds of crazy things. And it's even tougher because a lot of these people are having to sell the house to buy the next house, which adds contingencies, and it's very aggressive right now in general. So
yeah, closing help is starting to go away. I used to draw up my breakdowns and mention to the client, hey, 3% closing help is a pretty common thing around here. And I've started drawing them up to have no closing help and say, look, this is your bottom line number if you get $0 from the seller towards your closing costs. But if you get any, then of course you deduct it from that number. I want them to see the worst case scenario, because closing help is the first thing that's chopped, it feels like right now.
yeah.
And then contingencies are tough as well. So all those different layers to the offer process, and then you add in the lending portion of turn time and things of that sort. Being in communication with your lender right now is as important as ever, for sure. Because if you lose a day, that day you'll feel it in the back end.
Yeah. Yeah. And we've been running into a lot of stuff with appraisals pushing us back and a lot of other adventures. So we got to really jump on it when the problems arise, and the problems will arise. We need you to be on it and just get all over that and right away solutions, which has added a lot of stress to all parties, and it's been a little more adventurous.
Yeah, absolutely. And I'm actually surprised at how well some of our referral partners and partners in this business have kept it together. Honestly, you and I deal very much with a particular local title company. We know that title companies are just, they're filled to the brim right now. So many files, because they get all of them. As a lender, you get purchase refinance business. It's only a purchase business if they need a loan, right? Realtors, you can get the sales, you can get the buyers, you can get the cash deals, but guess what? Title companies literally get everything I just told you. So they are just absolutely, crazy busy. And so that's another thing, partnering with Billy to know that he has somebody who he's confident that will not be a part of the delay. But man, they have to have files stacked this tall.
Yeah. Right now they have to. It's nuts.
Yeah.
And the last question, and again, this is July 13th. I'm trying to reiterate that for most people, because I don't want them thinking, oh, you said 3 months ago, the blah, blah, blah. But in any case, what are you reading? What are you seeing in regards to the next 3 to 6 months in our market for loans?
Yeah. So the one thing that we were all worried about was the F word, forbearance, right? Different F word. And it was something that
I was thinking
actually
forbearance from the start, in my defense. From the very get-go, you're like, forbearance, right? Yeah.
Right, forbearance, right. So we don't even like to talk about it, but we've actually created a part of our loan package to basically say, hey, you're taking this loan, you have to not have any intentions of immediately turn around and going into forbearance. You have to have every intention of trying to pay it. And we were worried about what that might do to the market, with really on our end, banking and mortgages. If you go 6 months on a particular borrower without them making their payment, okay, well, you could take that hit, but multiply that by however many forbearances are expected. So they, in March and April, they priced that into the market. More, banks and mortgage companies were having a really tough time. Where does that go next? Where does forbearance then go into the other F word, foreclosure, right? Are we going to have a swing of foreclosures? And it's something that I've read a lot of different opinions about. I think there is an expectation that we will see an influx of foreclosure activity, unfortunately, because of people losing their jobs or taking time off of work or having pay cuts. Okay, the forbearance is a temporary solution, but that has a shelf life. A mortgage company or a bank might say, okay, yes, we'll let you forbear for 6 months or what have you, but eventually that's going to go away. It just has to. So when does that flip from forbearance into foreclosure type activity? And we're just pushing it down the line. So, when COVID started and shutdowns started in March, we're just trying to feel it out over the next few months. But this fall, The other part of that market conversation is the election. What's that going to do to some things? But that's always an uncertainty. So the foreclosure stuff is something to monitor this fall and winter time, and what it might do to the housing market. So that's what we're reading. That's what we're concerned about, honestly. And I'm sure you are too.
Yep. Yeah, what I've been telling people for the most part is if you still can pay, please do pay. Don't rely on the forbearance because it's not a forgivable thing. Like the banks want their money.
Mm-hmm.
So,
yeah.
And they're going to get it from you one way or another. They're either going to get it in the back end or they're going to get it through some other form. But if you can still pay, please do. And if you've got questions, call us. We can help you. We can do free home evaluations. If you're like, I'm in a tough spot, I need to at least see what my house is worth, to know what my options are in case this thing doesn't go well. All that stuff. We're here to help you with all that stuff. We absolutely are. Even refinances, that might be an option, but the value is so high. We want to be sure we're helping people, right?
Yeah. And the good news is, if you're watching this, ideally you're probably in the Southern Maryland area. Jobs are abundant, relatively speaking, abundant in this area versus other parts of the country. So in any downturn in the market, we tend to be affected lessly, than some markets that have a lot of temporary, jobs here and there. But, it's transient. We have the PCS season of military coming in and out. So like you said, if you're struggling with those mortgage payments and you want to try to find a solution, home value evaluations, do you have the ability maybe to rent that property and move back in with mom and dad type deal? I mean, there's a lot of different things that we can talk about. But Billy's the first person to call, of course.
Yep, we have options, and then in the end, we got to just do what's right. We don't do what's right for the realtor or do what's right for the lender. We do what's right for the people, because that's our responsibility first and foremost. And that's not just a cliche. Like, if you start looking into our histories, that's how we do things. That's how we live. So,
I'm glad you brought that up. So back to the crazy market conversation. When you're in a situation, I had somebody recently where there was actually 11 offers on this particular house. That's probably the most I've ever heard of a property locally. 11 offers is a lot. Ideally, that price is going to rise. Let's say this initial sales price is $375. It's just going to keep rising because you just try to get more and more competitive. And I know you and I have had conversations about you trying to protect your clients, and it's very, very important to try to see, okay, yes, I love this house. Yes, we might need a house, but is it worth going $25,000, $30,000, $40,000 above asking price? That's a real thing that's happening. Mm-hmm. And then being underwater in a year, 2, 5 years, what have you. Billy thinks about that stuff. Maybe other people don't. They just want to win the contract for their clients, but Billy definitely thinks about it.
We've lost a few. We've lost a few here and there, but I'm okay with it. Like, but here's the other thing. Like, if somebody sits down with us and says, "Hey, listen, this is my forever home. I'm going to be here for 30 years," that changes our approach as well. But the examples you were giving, people are like, "This is my 3-year house, 5-year house. This is my first home." In which case, we got to just pump the brakes and slow us down a little bit, because they're in a good position that if things do slow down and rates kind of go up a little bit, that they can get something that they're comfortable with. So we just got to be doing the right thing.
Sure. Absolutely.
Cool. I mean, I appreciate your time. I appreciate it because I know you're a busy guy. So we're going to throw this out onto the World Wide Web, and it's going to go worldwide.
I've been there before. It's a cool spot.
And if anybody has any questions or needs any help with anything, feel free. We're going to try to do this on a more regular basis because things have been so volatile. I think this is going to be something that continues to help. And we had a good string of doing it in the recent years, but kind of stepped away once the market lost its ever-loving mind. So it's a good thing I've got to get back on it, because now it's more important than ever to keep people updated on what they should be doing or could be doing. So,
yeah, I appreciate you having me, Billy. We'll do this more often.
Awesome. Enjoy yourself, sir.
Thanks, bud. We'll talk to you soon.